Are the big banks biased against new businesses? Are they biased against startups? Yeah, they absolutely are. As a matter of fact, if you're a newer stage business, like less than 3 years old, the last place you should go to finance your business is a big conventional bank. And I'm about to tell you why you want to avoid these banks, when you should consider them, when you absolutely shouldn't, and way easier paths for you to get the financing you need to launch a new business, start and grow that business than you'll ever find with big conventional banks. We got a lot to cover, so let's get started right now. First of all, big banks are the worst place you should go as a new business. And here's why. They have a bias. They do not like startup or new businesses. And see, big banks are FDIC insured, which means the government is actually insuring them, and the government requires they be very conservative for their risk. As a matter of fact, this got even worse after 2008. After the mortgage crisis, there was a law passed called Dodd-Frank, and this made it even harder for big banks to lend to small business owners. It required banks to be more conservative lending than they ever have before. And here's what happened. It used to be that 90% of business financing came from these big banks. It flipped. Today, 90% of financing comes from alternative financing sources, not the big banks. They are not the best source for financing for any business less than 3 years old. Now, don't get me wrong. Once you are 3 years, once you have tax returns and you've got revenue and profits on your tax returns, and you've got good personal credit and established business credit and collateral equal to what you're borrowing, whew, I'm exhausted just saying all that stuff. Once you have all of that, then go to a big bank. They're a good source to get long-term, low-interest rate money and be able to get it at really good terms. But again, the problem is the underwriting is excruciatingly painful. There's a lot involved with getting approved, and there's no way you're gonna pass the mustard, I think that's a thing, until you're really well established. So what do you do in the interim? Well, what you need to do is you need to focus on a lender that looks at your strengths, whatever your strength may be. Now, let's dive into a lot of different options. No matter what your scenario is, I'm going to decode an option that will work for you. So first of all, we're looking at good personal credit. So there's alternative lenders out there through programs like Credit Line Hybrid. And with Credit Line Hybrid, you can get like up to $150,000 as a startup business, brand new business. You can get 50, 100, 150,000 to launch your business. 0% rates, no doc, no income docs are even needed. All you need is like a 680, 700 FICO score or higher, and it can be your credit. It could even be a family member, a friend, anybody that's willing to sign as a signer. If you have that, congratulations. You're probably going to get approved for a lot of startup financing, way more than you'd ever get at a big bank. Now, the second type of financing is called cash flow based financing. This is where if you have 6 months worth of cash flow, you could use the cash flow, only the cash flow, to get financing. Personal credit's not looked at, it's unsecured, you don't need collateral, and you're able to get upwards of $500,000 in financing depending on how much revenue your business is generating right now. Now, another way to get financing for a newer business outside of the big banks is called asset-based lending or collateral-based lending. And this is where we basically are lending you money leveraging some kind of asset that you have as collateral. It could be stocks, bonds, 401ks, or IRAs. It could be cryptocurrency. It could be vehicles, residential or commercial real estate, inventory, equipment. Look, almost every kind of asset, even e-commerce inventory, could work for this kind of financing. And there's lenders that focus on every single one of those individually. So there's lenders that'll lend you money just because you have inventory. There's lenders that'll lend you money just because you have cryptocurrency. And the best part is you're typically able to get really low interest rates, loans, or a credit line. Personal credit doesn't even matter, and they don't even look at cash flow. So a lot of this kind of financing is absolutely personal, perfect for starters. See, I leave my blunders in here so you don't think I'm editing this thing. I'm going to show it to you real, because if you're on camera like this, you probably make some blunders as well. So there we go. Cash flow financing, credit-based financing, asset or collateral-based financing. Now there's all kinds of alternative financing options outside of that. Grants. Grants are a free way for us to get the money we need to actually launch a business. And there's a lot of money given out through federal grants, state grants, community grants, and private grants every single year. So grants is a great way to fund your business. If you have a unique concept or idea, you want to look at crowdfunding. Places like Kickstarter or Indiegogo are great ways to get the money you need to launch a company with a unique product or idea. Now, we can also get money from the crowd. So we now see it easier easier than ever to get money from individuals by going through crowdfunding platforms that gather those individuals together. They call them backers, and then they get money from the backers and they give the money to us. So now we can start using all kinds of crowdfunding platforms to be able to launch a business, or we can even get crowdfunding to launch in the real estate sector as well. And of course, we never, ever, ever want to forget about business credit. Business credit is the easiest way for us to get the money we need to grow our business. It's necessary to ever get a bank loan or an SBA loan. And by building business credit, you allow your business the opportunity to fund itself. You can get away from guarantees, personal guarantees, and personal credit checks. You can get 10, 20, 30, 40, $50,000 credit limits and higher on individual accounts. And every single entrepreneur that owns a business in the United States can get business credit. Cash flow doesn't matter. Credit doesn't matter. Collateral doesn't matter. It's like a catch-all. It's the kind of financing that everybody can get, and business credit can pay for 90% of whatever you need to be able to buy in your business. So use these alternative methods instead of big banks to fund your newer business, because big banks have a big bias against new companies and startups. It's one of the hardest paths you could take to get the capital you need. But these other alternative options I provided will put you on the right track to get the funding you need to launch the business and to be able to grow it as well. Hey, by the way, grab our free guide on 27 killer ways to fund your business at creditsuite.com/27. That's 27. And if we can help you along the way, let us know. At Credit Suite, we help you improve your fundability, build your business credit, and get loans and credit lines. So feel free to schedule a finance assessment with us where we can talk about all the money you can get right now and develop a blueprint for you to get more in the future. It all happens at creditsuite.com/consult. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.